if you owned Bitcoin at 10,000, right, and now it's 96,000, 98,000, whatever it is, and you had a bunch of debt, you could retire the debt. It's the same for any single person, any single government, we believe these governments, because the governments have gotten so big by extracting more and more. Governments they're supposed to serve us. Now they prey on us by extracting more. Like one of the companies we invested in last year at this time was an 18 million pre that was doing in trading volume about 30 million a month. This and tiny margins, but it's all in Bitcoin, right? And there's no counterparty risk because it's all in Bitcoin. People don't even know about this company, and it'll do $1 billion this month. 40 years ago, 39 years ago, I worked as a lifeguard, my first job, right? And I got paid $16 an hour. I was 16 years old. I was $16 an hour. When my daughter was 16 years old, a couple of years ago, she made $16 an hour as a lifeguard. What would $16 an hour buy because I bought my first house just after that, right? You think she could buy a house? And so when you understand what that looks like for people, that you're picking their pocket because wages are sticky, right? Now reverse that, put it totally 180 on its head. That means wages are sticky going down too. And so because people don't want to get rid of their employees and they don't want to negotiate to bring down their price, it means a massive increase to the middle class. But prices will come down, because what ends up happening is from that system, instead of working two people 80 hours in a week, we used to be able to, at least in US and Canada, we used to be able to have one person working and other person stay at home and raise the family. But because of this, now you had to have two people working, and a lot of times two people working each two jobs and trying to do everything, and they're just scraping by. And what is that? What happens to their kids in that environment? What does that look like? What is the society to decay in that? In Bitcoin, you'll be back to one person working, and then because prices that should fall naturally and actually get faster and faster deflation, then that person will be working 20 hours a week. And then 5 hours a week. And then, and they'll get richer the entire time, because the natural state of the free market is in service to them. The interesting thing about Bitcoin is every person who's tried to cheat it or trade it or create another coin to it and move all their wealth gets wrecked, which is really interesting, because but that makes sense, because we've always lived, all of our thoughts and actions are all, the last 5,000 years of human history, the winners extract more. We live in a system that all of the winners in your media and everything else that keep you fighting within the system extract more from you. Of course, they want you to stay in that system, right? Of course. And this is a cooperative system that doesn't care what they do. They can't break it. And the more you do that cooperates, the more you win. But we've never lived in a cooperative system. We've never lived in that. So it would challenge every thought we had.
People kind of go, oh, well, if the system's not juiced, does that mean credit doesn't exist in the system? And can the economy grow faster?
I get asked the same question all the time, Andrew, which is the credit underlying the existing balance sheet of the world, when I wrote my book, was 185 trillion. 250, and 185 trillion of that credit came in the preceding 20 years. So as the faster, remember this, productivity growth is deflation, right? So the faster productivity growth, forget GDP, faster productivity growth is deflation, faster deflation. So when people talk about productivity growth and increasing prices, it's like, how could you say those two things in the same thing, right? Because the productivity growth is leading to faster credit growth, and it's exponential because productivity growth is exponential. So the other side of the ledger has to capture that productivity growth at a faster rate. So the 185 trillion that came within the preceding 20 years, you knew it was going to happen. It was going to accelerate because the productivity growth of AI and compute and everything else was exploding around the world, and it had to capture it to keep that system in check. So it had to concentrate it. Government had to get bigger. Individual rights and freedoms from the centralized control system had to go away because it was a centralized control system. And I predicted in that book what it would be 5 years later. And because you knew it was exponential on both systems. And today we have $400 trillion of debt underlying that balance sheet. Now, the $400 trillion of debt, if you paid back, that's in another 5 years, we've added that much more, right? That's not the unfunded liabilities. And let's just say it for what it is. The debt is insolvent, right? If you tried to pay back the debt at $1 a second, it would take 12,873,000 years to pay back. It's already insolvent. The people that believe it's solvent are letting their wages get stolen in it at an ever-increasing rate, when all they need to do is move their time and energy to Bitcoin. But a lot of people will stay stuck in this. If the debt is insolvent and the total asset value of every single thing in that is 900 trillion global wealth, you could say that's our perceived wealth of the world, right? If you own a home and even if you have a mortgage against it and you have that gap, you think you have that money, right? But if the debt is insolvent, and nobody will allow the debt to go insolvent, but if the debt is insolvent, then the 900 trillion isn't worth 900 trillion. Your house is worth almost nothing, right? If it all failed, it would be a complete collapse. Every bank would collapse, everything would collapse. So what do? We pretend it's solvent and we add more to it at an ever increasing rate.
Maybe like a practical part of this is like what Bitcoin's role could be in extinguishing the debt or bundling with debt, right? And that's true at the individual, corporate, and maybe even nation state level, right? Like, so if I'm holding Bitcoin in my balance sheet personally, and then I'm buying things with my credit card, like my ability to back an increasing asset actually gives me leverage. MicroStrategy is clearly doing it at the corporate world. And then, you and I know Senator Loomis and other folks that are, thinking about this at the nation state level. So like, how does bundling an asset that's hard money like Bitcoin potentially impact our ability to service a debt that right now, like the debt service alone, is a significant impact on GDP?
Yeah, well, look at El Salvador as an example, right? Their bonds have been upgraded, I think, 2 or 3 times since they put one Bitcoin a day on their balance sheet. That was all. It's really simple. At the same time, U.S. bonds have been downgraded twice at the same time. So what's happening is Bitcoin is healing the debt. It's removing the debt in El Salvador. They think they're going to be debt free in 2029. Their bonds are now trading at par, right? They were 23 cents on the dollar 4 years ago. It was going to go insolvent, IMF again, and they said no to the IMF, and they said we're putting Bitcoin on the balance sheet. So
IMF didn't like that, if I remember right.
Exactly, because it's a control system. It's not so the debt is being repriced. It's going away, right? It's the same thing if you own Bitcoin, right? If you owned Bitcoin at 10,000, right, and now it's 96,000, 98,000, whatever it is, and you had a bunch of debt, you could retire the debt. It's the same for any single person, any single government, we believe these governments because the governments have gotten so big by extracting more and more. Governments they're supposed to serve us. Now they prey on us by extracting more, right? And we believe that system is normal because it seems normal to the system we're measuring from. It's not normal. It's not normal at all. And so you don't have to wait for your government. You don't care. It's wild how fast it's accelerating. And as it's accelerating, more and more people are moving there and taking advantage and going and spending their Bitcoin there. And so when I watch this happening around the world, and as you do too, Jeremy, and people say it doesn't have utility and it can't trade, when there is a peer-to-peer economy growing on top of Bitcoin that's growing faster than the internet, okay, well, it might not for you, right? But that's not true for around the world.
You invest in companies, right? So you said you've gone in and all in and just like living on a Bitcoin standard, but you also, as somebody who's been an operator and then an investor, sitting in both Megan and I's shoes in different states, there's a lot of really interesting work happening kind of at the frontier, the bleeding edges to me in this space that I don't think is as well known in Silicon Valley or in other sort of traditional tech circles. So like, how do you think about company investing and, sort of where the areas of opportunity are beyond just, huddling?
We have a very narrow mindset because we see Bitcoin as a protocol, and that means, and it's developing in layers. And that means you don't need another token or anything else to be able to integrate with it. And it's all interoperable. And so it's moving faster and faster and faster. And it doesn't take a developer to build this other kludgy coin with a bridge or anything else to be able to use it. It just is. And so that means the cost is so much less for the developers that are building onto driving an API into the protocol. All the wallets interconnect, and it's moving faster and faster. Well, there's a whole bunch of belief because tokens are still, they can have a token and then make a bunch of money on the token and sell the token and everything else. Well, there's a lot of belief that that's a real return. I don't think all of those are going to zero. So because it's native into the protocol. So how do you have to think about that? You have to think about whether companies that can deliver enduring value into something that is going to free. Right, a lot of this stuff is going to free or close to free, and so you have to construct companies differently. You have to construct the teams you're working with have to be different. It's so different than the venture world that exists today, right? That I took money from, I was part of, I understand, and then to move your head over to this, to what this looks like. One of the companies we invested in last year at this time was an 18 million pre that was doing in trading volume about 30 million a month. This and tiny margins, but it's all in Bitcoin, right? And there's no counterparty risk because it's all in Bitcoin. People don't even know about this company, and it'll do $1 billion this month. And so the rate of growth of the things we're seeing and the construction of what this looks like is so crazy, but not even the rate of growth. In the old world, you go Series C, pre-seed, seed, Series A, B, C, D, hopefully get public, and a lot of times those companies still wouldn't be profitable. There's 3 portfolio companies in a fund that's only 2.5 years old that are already profitable and growing at this rate, and they're adding Bitcoin to the balance sheet each month. Like, it's actually remarkable how effective and why should it be? Because we're measuring from Bitcoin. We're measuring we're measuring in something that doesn't cost the same to be able to achieve profitability. And they can achieve amazing growth in there. So it's a real different mind shift. And then the depth of what I'm saying here, if you're trying to get to this mind shift from the typical TradFi or everything else, where you see all of the tokens and everything else, we see some of that, but we haven't been, like, we can't see, like, the valuations are insane on some paper that is 3-5 years away from maturity, that then by the time they get even close, Bitcoin's going to take it all.